I'm going to break it down into age 100 and endowment age 120. And then after that, we're going to move into our guaranteed whole life section. And then we'll move into a little bit of indexed income. We'll talk about tax advantaged income in that as well. Now, what we've done is we're going to also speak and address probably the major categories in health classifications, from super preferred all the way down to standard, male and female. And I had to divide this, Jessica, because there's just so many ages. So what I've done is I've done a segment of 25, age 30, age 35, and age 45, and I'm calling that the next generation.
Perfect.
And then I'm taking everybody at 50, 55, 60, and 65, and I'm calling that the ARP Nation, which of course I belong to. So let's go through what we're going to talk about today. Again, you can call 1-800-290-7226, press 3, and order our term report after the segment. You'll want to see it all, because all we can do is talk about the final players. But if you want to see everybody, well, just do the report. It's huge. Now, before I go on, I need to talk a little bit about a few disclosures, a few caveats, and one more thing to add. I have to give a little bit of honor, due to certain carriers that didn't make the grid, but they were so close.
Yes.
Really close. And I don't want to just say, well, you weren't really a good carrier here, but I want to bring up a few of those. First of all, we did not do the term grid with fraternal organizations. So if you have a fraternal organization, you're saying, Steve, you didn't even bring them up. Well, that's because we're not going to do it.
Right.
If you have banks, we're not going to do the bank term if you're at a bank. And also, we're not going to include any non-brokerage channel term, because the market is so huge, and I try to get it down to what 95% of the market is. So we've had to do that. Now we want to bring up a little bit about Genworth.
Right.
Because they're a player.
They are a huge player.
But in some of the grids, people will say, well, why aren't they in these grids? Well, certain areas, they just missed it by pennies.
By that much.
I know, so I just feel bad that they're not there. And Penn Mutual, the same. Mm-hmm. And I want to also bring up North American, or as a lot of people call them, Nicola, and bring up the idea that these guys really they're right in the hunt. And of course, in GUL land, Guaranteed Universal Life, they will be major league players, so don't weep for them yet. They're going to be major players in the segment. And one more idea. American General just released their new term insurance rates, and they are blockbuster, but they came too late for us to put them into the show.
Yes.
So I'm sorry. It's not that they don't. When you go out to Vital Signs, CompuLife, boy, I hope we're getting paid for that little plug. And you go out to all our others, you're going to be able to see, wow, these guys are hitters. Right. AG really stepped up to the plate. Well, we just couldn't get him in, but I just want to give them an honorable mention. Well, Jesse, when we're talking about what do we have first up? What are we looking at first?
Well, basically, Steve, first of all, I'm really excited that we've had the opportunity here to just go through and really dig into who the key players are, find out who the key matchups are in our industry. And first of all, we're going to go over the guaranteed level term. Temporary expense reimbursement money is our key focus here.
Temporary expense reimbursement money. Is that your acronym for term? Wow, I love that. Give me 5. I love that. Okay. Yeah. Well, let's talk about it. We'll do male first. We're going to stay in the male division, and in 10-year level term, remember, we looked at, I hate to say this, hundreds of contracts. The 4 big players are Banner, ING, Metropolitan, and AXA on 10-year male on what I call the next generation, 45 on down. Our smoker players in that same division are going to be Met, AXA, Genworth, and, of course, Banner. And then in the ARP Nation on 10-year, that's my group, Banner, ING, AXA, and Met are the big players on the non-smoking side. And on our smokers, our tobacco, you're going to be looking at Banner, ING, AXA, and Met. Now, some of these are repetitive because they play in both areas. But again, we're going to have to insert some of our new ones. On the male, 15 younger people, again, the next generation, Banner, AG, ING, and AXA are your top 4 players. And on the smoker, you'll see AXA, Metropolitan, ING, and Banner. On the older ages in term 15, you're going to be looking again at Banner, ING, American General, and that's their old rate, by the way, and AXA. And then on the player on where we're looking at smokers in that 15, we have a new player, Transamerica, AXA, ING, and Banner. Now moving to the 20-year level term on males, the non-smoker, AG is huge. Banner, and again, this is not even their new product.
Right.
And ING and AXA, and the smoker players right now are AXA, Transamerica, Banner, and surprisingly again, AG, American General. In the older ages for male, what I call the ARP Nation in the 20 years, Banner, ING, AXA, and Metropolitan are players. And that same amount of players, those 4 players, also play in the preferred smoker and standard smoker rates. Again, when you see our report, we break this down much more than I'm doing now. I'm just giving a cursory run to give you our final 4. And then when you look at our males, at 30-year guaranteed level term, our players are Banner, Transamerica, wow, there's a surprise, ING, but the biggest surprise in this to me, Hartford's a major player in this. Wow, I couldn't believe it. And then when you talk about who are the smokers at 30-year for males, at the younger ages, it's going to be Transamerica, Banner, ING, and a surprise to me, Nationwide. How did they get in there? But they're there. And then 30-year for the ARP Nation, the players are Transamerica, ING, and Principal made it into that. I'm just so surprised Principal made it in there, as well as Banner. So now we're going to move on to our female rates. Now, I've noticed that carriers treat women differently.
Yes, they do.
And even if you're a smoker, they're still giving you a huge discount. Let's go through our female rates.
Well, don't we deserve it?
Oh, well, remember, you can
For all
write...
the women out there, yes, we do.
You can write Jessica at brokersalliance.com, and all the love mail you want to give her, go right ahead.
And one thing that I noticed too, Steve, as you were mentioning the carriers that were coming up, the big players, those that are most competitive in the rate classes that we've done our homework on, is that a lot of these carriers, a majority of them that you're mentioning, are actually also linked to our IGO digital application system.
Oh, I love that.
And so, not only are the rates there, they're competitive. You can simply actually go to our website. You can find these rates for yourself, and you can actually directly link to the IGO system from our website, and it'll actually carry over all the information from the quote that you just had run and populate onto the application itself. So just wanted to throw that in there. But
I appreciate it.
The names that you're throwing out, IGO is
all play.
Absolutely.
Good call. Well, now let's talk about the female 10-year rate. Let's talk the young people first, the next generation. Our players, top 4, Banner, ING, Met, and AXA. And the smoker in that division, Genworth, AXA, Metropolitan, and ING. And I got to say Banner because they were tied. And then on the guys' side of the fence, the ARP Nation, the gals, ARP Nation gals, 20-year, we're looking at 10-year, Banner, ING, Minnesota Mutual. How do they get in there? And AXA, and on the smoker side, we're looking at Banner, ING, Minnesota Mutual, and Genworth. I tell you, once in a while, some of these companies slip in here.
Yep.
They surprise me. And then, of course, we're trying to be as objective as we can. On the female 15-year younger set, 45 on down, the players are ING, Banner, AXA, and Minnesota Mutual. And the smoker side of that equation, Banner, ING, AXA, and again, Minnesota Mutual. On the older 15-year term, shockingly enough, we have Banner, Minnesota Mutual again, and ING and AXA playing on our non-smoke 15 years, and our smoker side of that equation, ING, Banner, Minnesota Mutual, and of course Transamerica, which always plays in that market. Now we're getting a little longer here, 20-year guaranteed term. We're looking at the non-smoker females for the younger, 45 on down. AXA, Banner, ING, and Transamerica are the players on the non-smoker side. And then the actual smoking side of 20-year is really at Banner, ING, AXA, and Transamerica. On the older set for the gals that are 50 and older, the ARP Nation, it's Banner again, ING, AXA, and Minnesota Mutual. And Minnesota Mutual and AXA and Trans show up, and Banner as well, on the smoker side. And then bringing up our 30-year guarantee, we're looking at female, younger, 45 on down, Banner, ING, Hartford again, another surprise, Transamerica. And then on our smoker side of that equation, ING, Transamerica, Prudential, and the Met. For the ARP Nation, those over 50 and older, our 30-year for females is going to be Banner, ING, Genworth, and Trans, and everybody's all over the board in the smoker. So nobody really won that division because nobody wants to really play at those older ages and smokers. There's just a smattering.
But it's great information to have. And our producers out there, we receive calls all the time looking for who has the best smoker rates. And just like you said, it's just really going to be all over the board.
And we're going to send you that report. All of you who are attending it, you'll get the entire report. It's much more detailed, 72 pages. We go from super preferred all the way down to standard, male and female, 10, 15, 20, and 30 year. We're using $1 million death benefit as our boilerplate, which is pretty much standard in the industry. And now I want to move on to another guaranteed area, guaranteed universal life. Now, when I had to do this, I had to break this down into two camps. Those who do guarantees to age 100 and those who do guarantees to age 120. So let's just get on to it. Our players in super preferred, age to 100, guaranteed universal life. Here are your big four. You got American General, North American, Banner, and Nationwide. Wow, Nationwide. How'd they get in there? Preferred Plus at age 100. American General, Genworth, Banner, and Nicola. And again, this is all our boilerplate 45 male. And then on our preferred non-smoke, it's American General, Genworth, Banner, and Nicola. And then when we move to Standard Plus, American General, Banner, Genworth, and Nicola again. It sounds like we're repeating it, but really they're winning. And then Standard is Nationwide. Wow. Genworth, Banner, and American General. On the guy's side, all the way over to the 120, we're looking at Metropolitan at the super preferred, American General, the Prudential, Protective. Notice that those names started changing out the moment we went to 120. Then when we went to Preferred Plus, Metropolitan, Banner, American General, and Prudential. And then in preferred non-smoker age 120, we're looking at Metropolitan, Banner, American General, and the Prudential. And when you drop down to Standard Plus, Banner, Metropolitan, American General, Nationwide sneaks in there again, and at our standard boilerplate, Nationwide actually leads that plate. I'm really surprised at that. And then a newcomer to our show today, Aviva and Protective, and then bringing up the rear, Penn Mutual. I mean, those are really, having Aviva in there, that was a surprise.
Right.
So now moving on to our guaranteed for our females in our ranking for age 45. To age 100, American General, Nationwide, Genworth, and Banner are our final four on super preferred. And then on our preferred plus, it's American General, Nationwide, Genworth, and Banner. And then on our preferred non-smoker, it's going to be, I hope you guys are taking I hope you have a pencil and paper here. But don't worry, we're going to send you the entire report. You won't have to worry about it. On our preferred, it's American General, Nationwide, Genworth, and Banner. And then on Standard Plus, our final four, American General, Banner, Nationwide, and Genworth. And then finally at Standard, we're looking at Nicola, North American, Genworth, American General, and Banner. Now, there's kind of shifting when we get into permanent land here, and females, different numbers. To age 120, the super preferred is Protective. Wow, there's a surprise. Metropolitan, or I should say MetLife, American General, and Banner. And then on Preferred Plus, it's MetLife, Aviva, Protective, and Banner. And then in our preferred non-smoker, it's Aviva, American General, Protective, and Banner. And in our Standard Plus, the winners are Banner, Metropolitan, AG, American General, and Hartford. There's a real surprise to me. And then Metropolitan again, bringing up the rear of the standard for females. It's Metropolitan, Hartford, Protective, and Nationwide. Now, again, you can call, this is not in our report because we're in the Guaranteed Universal Life, but you say, if you want to write us, and you can write us at our radio station. If you want to write The Quest at brokersalliance.com, and I'll make sure you get some of these numbers off our guaranteed sheet. Now, when we're talking about whole life, and people say, well, whole life is dead. Why are you even addressing it? Well, I'm looking at the players, male 45, because this is our big boilerplate when you do write it. We're looking at male 45, and here are the players right now, number 1, 2, 3, and 4. The number one player on the block right now in super preferred or best preferred is Metropolitan. Then number 2 is the Guardian. Number 3 is Mass Mutual. Number 4 is New York Life. And number 5 is the venerable Northwestern. When we go to our second preferred class, Preferred Plus, Metropolitan again leads the pack, and their numbers are number 1. Number 2 is Mass Mutual. Number 3 is Guardian. Number 4 is New York Life, and Northwestern is number 5. Again, they're really close. And then when I'm looking at the final side, the standard, when you're just looking at standard rankings, I'm looking at the Metropolitan leading the pack, and then number 2 player is going to be the Guardian. Number 3 is going to be Mass Mutual. Number 4 is New York Life. And again, the venerable Northwestern. Those are our whole life players in that division. Now we're going to talk a little bit about, and I'm kind of going to go out a little bit on a limb here because everything we've talked about thus far has been guaranteed. Guaranteed term, guaranteed universal life, guaranteed whole life, all the way up to age 100. we've looked at 2 or 3 boilerplates. But now I want to talk just a little bit about the players on supplemental tax-advantaged income with using Index Universal Life. We ran so many illustrations, I got to tell you. I was up all night for a couple days in a row trying to get a fair idea. We used a boilerplate of 8%. We did month-to-month, point-to-point. We did our best combination indexes. Are they allowed to do global? We did it. We showed a female, 45, super preferred, option B, increasing death benefit. We switched option B to option A at age 65 and started running distributions from age 65 to age 100. We took all the arbitrage loans, whoever gave us the best loan values, we took it. And of course, it just happens to be arbitrage loans. And the top players in generating total return income based on what I've just said, and again, if you want to do this, you can order it later, is Nicola, North America, leads the pack, number 1. Number 2 is Life of the Southwest. I'm sorry, that surprised me.
Yeah.
I was surprised on that. And then, of course, a major player that's been in index and really started this whole arbitrage issue, Lincoln Financial, or Lincoln National, actually. And then ING's number 4, and I'm going to throw in Pac Life because Pac Life and ING were so close on this boilerplate. I wanted to make sure that everybody who's a player can get their due. So when you're thinking about these kind of contracts and you're looking for tax-free supplemental income, those are your players. Again, Nicola, Life of the Southwest, Lincoln National, and ING, and of course, Pac Life. Well, that's all the time I have for life insurance. We'll have to pick it up later in our big show coming up in the fall.
Yes.
Well, coming up in our next segment, we're going to rank the top 4 annuity products in every division with Erik Palmer, nationally recognized annuity expert and frequent guest on my radio talk show, The Quest for Financial Freedom. All our registered attendees will receive our Term Life Insurance Report, one of the most comprehensive product comparative spreadsheets in the industry. Remember, you can watch this broadcast and order it or download off Vimeo, YouTube, Insurance Newsnet, and Agent Navigator, or click on our red archive button on our homepage at www.brokersalliance.com. We'll be right back after a word from Western Reserve Alliance. Stop selling the old term insurance. Start selling the new. Hi everyone, Steve Savant here, the host of the radio talk show, The Quest for Financial Freedom. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and the term that ended in a claim, well, the client had to die to get it. It's a wonder to me that we just don't call term life insurance death insurance, because you have to die to collect on the benefit. Now there's a term insurance policy that covers you during a chronic illness. It covers you in a catastrophic event, even a terminal illness, and pays your monthly premium during unemployment. What term insurance can do all that? Western Reserve Life Advantage Term. No other consumer insurance product bundles so many solutions to so many of life's unexpected problems in one policy. There's more: disability rider, a waiver of premium, children's benefit, and even a return of premium rider. For more information, call Brokers Alliance at 1-800-290-7226. Well, welcome back, everyone, to our special tribute to March Madness and the Final Four. I'm Steve Savant, host of the radio talk show, The Quest for Financial Freedom. I'm broadcasting live at the All American Grille in Fountain Hills, a suburb of Phoenix, Arizona. You can watch our broadcast right now at www.brokersalliance.com/March Madness. And after the broadcast, you can download the show right off of Vimeo, YouTube, the Insurance Newsnet, and Agent Navigator. And click on the red archive button if you want to go right to our homepage on www.brokersalliance.com. And don't forget to check us out on our social media sites on Facebook, LinkedIn. Follow me on Twitter and the Insurance Forum where I blog. In this segment, we're going to rank the top 4 annuity products in every division. And to help us sort it all out, please welcome nationally recognized expert Erik Palmer. Welcome to the madness, Erik.
Happy to be here.
Well, Erik's been on my show so many times on The Quest for Financial Freedom, everybody thinks you're my co-host. You know?
That's okay.
I know. It's fantastic. Well, let's get to it because time's a-wasting. We're looking, and remember, everything we're saying today changes so much. We're only giving you our debrief. We're doing it on March 31, and Erik and I are thinking about doing a monthly broadcast just because everything changes in the term market and especially in the annuity market.
With the rates being what they are today, we see fluctuations nearly every day, every week in this market. So everything we talk about today, keep in mind, it could very well change. Call us up, 1-800-290-7226. Our annuity division is extension 125, and you can talk to one of our internal guys and find out what the numbers are the day you want to sell it.
Well, let's talk about multi-year guaranteed annuities first. Tell me who the players are, what do you like about them, why do we play with them?
There's quite a few variations in the multi-guarantee market. What we're really looking at is a range from 1 to 10 years in terms of how long you can get these rates guaranteed. And this type of a product fits well in that CD alternative marketplace. So this morning I checked bank rate. 1-year CD is about 1.06. A 5-year CD is at 2.29. Remember, that's taxed every year. So these products are going up against that. And what I look at is across the board from 1 to 10, we hone in on the 10 years, the 7 years, and the 5 years. We see those being sold most often. So on the 10-year, number one right off is North American, or Nicola, as you had mentioned earlier, A-plus company. They're at 4.25 in their high band. And keep in mind the rates I'm quoting today, I'm going to talk about the high bands. That ranges anywhere from 100 to 250,000 of single premium. Calls for the details. You get the report.
Is that a lock rate?
That is a locked rate, 4.25 for 10 years.
For 10 years. Wow, I didn't even know treasuries are at that high.
They're not. So if you get to the point where you can hang on for 10 years, this is a great rate right now in the market.
4.25.
Our second place, we're looking at ING. They're at 3.6 on a total, or excuse me, 3.7 on a total yield. Year one rate's a 4.6. Year two is 3.6, and that carries on that point forward. So your total yield 3.7%.
How long is that locked down?
That's a 10-year.
10-year, and of course ING is International Nederlander. Oh, I just spoke Dutch, and they're changing their name to a U.S. subsidiary. That'll be coming up in one of our broadcasts. We'll tell you all about that.
Exactly right. Now, number 3 on the 10-year list is Integrity. They're a great company, A+, 97 Comdex, very strong company. They're at a 3.57 rate, and coming in close at number 4 at 3.45 is Phoenix Life. So those are the top 4 picks in the 10-year, multi-year guarantee space. And again, if you've got clients willing to hang on for 10 years, that's where you're going to get the biggest rates right now.
Boy, that North American rate at 4.25 is awesome.
It's untouchable at this point.
Unbelievable.
Now, we look at the 7 years and the 5 years, and I'm going to kind of go quickly through this because there's
Sure.
a lot to talk about. But in a 7-year, we're looking at Liberty Bankers Life is number 1. They're a B- company, but when you're taking a look at what we're doing here, we're looking at a guaranteed rate. They're 4% for 7 years, and that's really strong right now for a short-term rate. In a close second is, again, North American, A+ carrier. They're at 3.55 for 7 years. Then we've got Genworth and Old Mutual bringing up the rear. So those are your top 4 carriers in the 7 years. Looking at a 5-year, which is one of our more popular spaces for multi-year guarantee annuities. We're looking at Liberty Bankers, again, coming in at 3.4%. You've got Old Mutual Financial at 3.2%. American Equity comes in the 5-year space at a 3.15 rate. And we've got Royal Neighbors in number 4 spot with 3% even. So again, keep in mind I said a 5-year bank is paying 2.29 on average. That's taxed every year. If we can offer our clients a 5-year at a 3% and that's tax deferred, you're providing a lot more growth opportunity.
And you know, if you say, wow, some of these names are kind of unfamiliar to me, go ahead and order. You can just call 1-800-290-7226, press option 3, and say, I'd like to see the due diligence report on that, the ratings, the balance sheet, their financials. We have all that, happy to do so.
Yeah, these reports are available in real time, and that's what's big to keep in mind on the annuity segment of what we're talking about, the reports that we're providing. These we prepare nearly every single day, again, because the rates fluctuate so much.
Well, let's talk about traditional fixed, because that used to be the big play, and it's kind of taken us back, well, I don't want to say a backseat to multi-year guarantees, but it kind of is.
It has over the last several years, but what we're seeing now is if you believe in inflation and you believe that inflation is possible, and you know, after printing the amount of money that we printed, I have to believe it's going to come somewhere along the way, then you could look at a fixed rate product because it gives you the potential to still have a higher rate as our economy starts to boom and interest rates are coming up, and you can lock in a decent rate at least in the first year. The traditional space and the index space is a little unique. We're talking about Final Four. We're relating things to the tournament. Multi-year guarantee is one thing. We can go by the rate, but with these products, it's more than just the rate. There's a lot of features on these products. So my picks are more based on that sort of, I take a look at who's got the best rates, but then I look at the product and what it provides. Coming in number 1 really is a company we work a lot with, and for a fixed product, I think this one really stands out. It's from a company called Forethought Life. They're rated A-. It's an excellent rating. They have very strong financials, and it's a 10-year fixed annuity. And what it does, it provides you a first-year rate of 5%. You're guaranteed a floor of 2%, but every year that rate is declared. And again, I talked about inflation. That could be a very powerful product as we go down the road here over the next 10 years. What really stands out is 2 riders. It has a death benefit rider that guarantees a 5% simple interest for 20 years. So you got older clients, you work in the life insurance space, you've got all kinds of clients that potentially would like a guaranteed death benefit growth. You also have an income rider, provides an automatic 15% bonus to an income account, guarantees that's going to grow at 6% for 10 years, and you can flip that switch at any time for income. So you've got your guaranteed traditional fixed.
Does it cost you?
It has a 75 basis point annual
75
charge.
basis points to play. Okay.
But in the spectrum of annuities, there's over 500 products on a regular basis that we analyze. This one stands out because very few have the income rider opportunity that's attached to it. Coming into a close second there, we like a product from American National. We call it the WealthQuest Citadel. There's a 5-year and a 7-year. The 7's most popular. The biggest thing there is the issue age. There's no issue age limits. It's an annuitant-driven contract. So a lot of times we get in a situation where we have older grandparents. They want to potentially provide
you're
something.
Talking really old.
Really old,
I mean,
90s.
What's the oldest you've seen
we issued a contract on a 99-year-old.
What?
And we were happy to do it. And this is a product that stands out because there's very few in that space.
I bet you very few people know that. That's a huge issue. So our normal annuities go to about 85 generally, right?
80 to 85, absolutely.
Now we have somebody that goes all the way out to, you said did you say forever?
Well, there's no age limit on non-qualified money.
Wow. Unbelievable.
That's a good product.
I'm writing it down.
I'm going to say Great American as a whole in this third slot because Great American's got a few products. One that stands out is the American Freedom. It's a contract, very strong interest rates, clean surrender charges, which is really important to people today. But Great American offers a return of premium rider on their products. So they stand out to me in this category as well because a lot of times we have clients that want liquidity. They fear liquidity not being in existence. That's why they're buying CDs from the banks. And so if we can offer that liquidity through an annuity product, I think that's a big deal. So we can add those return of premium riders to Great American. That one stands out.
And is that a cost as well? Is that part of the contract?
It is a cost that's associated with it, and that cost can vary by the contract. Okay. But keep in mind that could be very well worth it to your client for that liquidity feature.
Oh yeah, if you don't, the value proposition of paying for a rider, if it gives you the kind of value, then maybe you don't mind paying 45 to 75 basis points.
Absolutely right. Coming in at number 4, we like Genworth. Genworth's a great company because they are providing a product that we call the Secure Living Liberty. What it does is it provides you a bailout rate. Okay, so you've got a traditional rate at 2.65. That's your floor. That's also called the bailout rate. If they ever had to declare the rate lower than 2.65, the client can walk away from this product free and clear of surrender charges, and they have the 100% liquidity on their money. So it gives you that opportunity to get into an annuity product. 2 years down the road, you don't like where the rates are going, get out of that thing free and clear if it's below the bailout
I hope
rate.
there's no reversal for our advisors.
After the first year, you're good to go.
Okay, I'm golden. I'm looking at that product. Okay, go ahead.
So that's kind of my picks there again in the traditional fixed annuity space. And like I said, there's a lot of carriers, a lot of products out there, but we hone in on these because it's not just about the rate in this particular instance. It's about the additional features that you can provide your clients.
Well, let's spend a little time on fixed indexed because really it's a big part of our practice right now. So give me your players. And then let's walk through why do you like these? Not only because of whatever their caps and participation, and I wish we had time to. We'll break that out in another show.
Right.
But let's talk about that. Your top 4.
You're right in what you said. We could spend an entire day just talking about indexes in general, and then we could spend another day talking about the index annuities that are out there.
That's my fantasy, by the way, to spend a whole 24-hour period just doing that.
Just doing annuities. That's well, right. and again, with the indexes, there's a lot of variations there. There's participation rates, there's cap rates, there's spreads, there's different indices that these companies are using, and there's different crediting methods. Some have what we call trigger performance, where they're setting a cap, and if the S&P makes any sort of fluctuation or it's where it's at when you bought the contract, you could potentially get the full rate. We have look-back strategies. So there's a lot of things. What I've honed in on here is again, the products that are providing lots of features, not just one in particular, not just rate strong, but strong across the board. So coming in number 1, Forethought Life Insurance, they have a product called the Index 115. What stands out about this product is, again, a couple of unique features. They have an income rider that's built into the contract, costs 75 basis points a year, but it gives you a 15% immediate bonus, guarantees 6% growth for 10 years or until you turn on the income. And it has a death benefit rider that you can add for an additional 75 basis points a year. And that will guarantee 20 years growth at 5% simple interest. So you can have the sort of two-punch combo, if you will. You got income and you've got death benefit. And in the middle is the growth part of the contract, the account value. It's got strong rates. There's good monthly point-to-point available on it. And so that one really stands out to us. Clean surrender charge, 10-year. They've got the NAIC model met for the states that are now approving that. So it's a great product to have. And again, it addresses all the needs. You got accumulation, you've got income, and you've got death benefit.
Huge
covered.
Flexibility on
Major
this
flexibility.
Okay.
Coming in at number 2, North American. Great company, A+ rated. I chose this product. It's a long surrender charge, but we have a lot of individuals in their 30s and 40s looking to contribute to IRAs, looking for products that aren't providing a lot of sizzle necessarily on death benefit features, but growth opportunity. So I looked at a product from North American. It's called their Freedom Choice. It's a 14-year product, and right now they have caps in the 9s, and that's unheard of. So
wow.
it's when we're finding that in the industry, we're seeing caps anywhere from 4 to 7%. Finding a product that has a cap in the 9s is important. It's a big deal. So this one comes in at number 2 because it's your best accumulation opportunity out there in the market today. Coming in at number 3, I've got Phoenix Life. Now, Phoenix Life is a company that's just recently emerged in the marketplace. You may know them well from their life insurance days, but they've really built a powerful product line. It's called the Reflections series, and it's exclusive actually with just 9 IMOs in the country. Brokers Alliance is one of them.
By the way, if you go out to our site, we actually interviewed one of the owners and the national sales director on their company and some of these things. So if you want to get more information, you can hop out and
absolutely, and you'll find that we have a lot of sales support. What makes this product stand out is we still see the need out there today in the market for 10% premium bonuses. This product provides it. It's a 12-year surrender, has a 10% premium bonus, and you can add the 2 income riders. And I'm going to talk about income riders here coming up in the next part, but what I like about their income riders is that there's one that addresses the immediate need, or there's one that addresses the long-term need. So with one product, you can cover both bases on the income story. So again, 10% premium bonus, 12% product, decent caps, and they provide a lot of variety in the indexing. You've got a trigger performance, you've got a look-back index, and you've got your typical annual point-to-point on the S&P. So a lot of options there. It's a great product, really stands out. Not to mention that the last 3 products I talked about are very strong commission. So if you're winning for the client, at the end of the day, you get a high commission for it. It's a win all the way around. But these are really standing out for those categories. Number 4 in the index annuity for me is a company that you may not have heard before. It's Sagicor Life. They've got a strong rating. They're rated excellent with AM Best. Big international company. They're actually in 22 countries.
Their domicile, their U.S. operations is right next to us. We're in Fountain Hills. We're in Scottsdale.
Exactly right. So we've built a great relationship. In fact, we're hosting a golf tournament here coming up soon with them in Fountain Hills. But what makes their product stand out the most to us is that it's a 9-year surrender. It has an immediate 5% premium bonus that's available day 1 on your premium.
Wow.
And they have a 50% cumulative withdrawal. I'll say that again. A 50% cumulative withdrawal. So you go 5 years into this contract, you've got 50% free and clear, no surrender penalty that the client can pull out. Liquidity is an issue. We want to make sure we have liquidity as clients out there. This is a great product to address that on the index.
So it's not like if you don't use it, you lose it. They just accumulate it.
They accumulate those withdrawals. So you go 5 years in a row not taking any money out, you've got 50% you can
So
pull.
I can take without a surrender. Now, of course, there's still ordinary income tax issues and so forth like that.
Absolutely.
But surrender hit, wow.
Access to your money, that's what's important to these people.
So those are your top 4.
Those are my top 4 on the index. And I did take a quick look.
If they want to get you have spreadsheets on all this. So why don't you shoot the address or whatever you want them to contact to go ahead and pull that.
Absolutely. If you go to brokersalliance.com, right on the left-hand side of the website, you see there's an annuity tab. Click on that. It says annuity product search. You can start there. You can search the thousands of products that we have access to by any type of category, whether it's cap, rates, or withdrawals. These reports are also available if you call 1-800-290-7226, extension 125. Talk to one of our internal annuity guys. These guys they're working in the space every single day. They're immersed in these products. They've got these spreadsheets in real time. They can run them and put them in your hands in minutes.
Unbelievable. Well, let's talk about your income riders, because that's a whole nother. I can't even think about using the word annuity, and then we have a whole part of the annuities section or segment of the show called income riders.
Income riders. It's funny. We almost get into a sense where we're quoting these like we are quoting term insurance these days. Income riders are becoming prevalent in this marketplace. They're on variable annuities, they're on fixed index annuities, and we find apples to apples, fixed index annuities are really providing some powerful growth and options for these clients. So I'm going to go through a few scenarios. I actually kind of ran this out like we did the term section. I looked at a male age 60, and I got a couple of different scenarios. The first one is, if you're 60 years old, you're a male, you purchase the contract, and you want to trigger the income after the first year. So this is an immediate income play. Coming in number 1 is Forethought Life. Forethought has a product called the 125. It gives you an immediate 25% bonus to your income account. It guarantees a 5% compounded growth for 10 years.
25%?
25% immediately to the income account. It's not available on cash surrender.
But it's available for
available for that income account to calculate what your payout's going to be.
Unbelievable.
And at age 60, 1 year of deferral, they're coming in number 1. Number 2, and a very close number 2, is Phoenix Life. Like I mentioned before, they have a 10% premium bonus on their contract, and they too have a 25% automatic bonus that they'll apply to the income account. So those numbers come out really close.
Well, that's huge. 25% with 2 carriers like that?
2 carriers, 2 options, and it depends on what we're trying to calculate for.
Right.
Number 3 and number 4 are getting close. We got National Western, and we've got Allianz coming in. And Allianz has a great product, 10-year surrender. They have a 8% simple interest growth on their income rider, and again, they're coming in number 4 on the immediate income stream. Now, taking that same male at age 60, let's go 5 years and 10 years out, we start to notice some trends. Coming in number 1 and number 2 is Great American and North American in the longer-term deferral. That's because they offer an 8% roll-up, premium bonuses on their products, and we see a lot more accumulated growth over the long term. And number 3 and number 4, again, is Phoenix and Forethought. So those companies start to resonate as we go longer in the deferral. You've got Forethought coming in with the immediate bonuses. It really provides a lot of powerful growth in the upfront side of it. Phoenix Life as well, and so that tends to hang on for 5 to 7 years when you're deferring that long.
Wow. Well, that's income riders. Let's talk about annuities. Those 25% kickers are huge.
That's a big difference maker, and as you can tell in the immediate market, it truly can make a difference. And I ran some quotes also on a 70-year-old, and for the sake of time, we won't go into too much detail, but I focus on 70 because right now, I ask this question: are you selling qualified money into a fixed index annuities with lifetime income riders? And if you are, you need to get some of our charts, because what you're going to find is that, first of all, there's income friendly and there's RMD friendly. So RMD friendly means that the features that are provided in the contract, the income that you're getting off the contract, isn't affected negatively by the fact that you are forced to take these distributions at age 70 and a half. So if you're selling qualified money, get a hold of these reports. At age 70, going into 1 year deferral, so say you're going to use this income to address the RMD, you're looking at Great American and North American at number 1 and number 2, Phoenix Life and Forethought. Again, the same companies I talked about before, just arranged a little bit differently, but we compare the numbers apples to apples and we look at what we're trying to address. Phoenix Life and Forethought are RMD-friendly contracts. These are contracts that are, again, not going to negatively impact you as you make these withdrawals. The income rider should cover the amount that you're taking out. And again, let's go case by case. We'll take a look and make sure it makes sense.
Wow. Well, that's huge. 25, still stunned at the 25% number.
Right.
Well, thank you, Erik, for being on our show. Listen, coming up in the next segment, we're going to rank the top 4 impaired risk carriers in standard and substandard divisions by disease with Gary the Bulldog Baker, nationally recognized impaired risk expert. And all our registered attendees will receive our term report, the most comprehensive product comparative sheet in the industry. And remember, after the broadcast, you can order the report, download the show off Vimeo, YouTube, Insurance News Net, and agentnavigator.com. And hit the red button on our homepage at www.brokersalliance.com, where you can pick up all these reports and ask for anything you need. We'll be right back after this word from Western Reserve Alliance. Stop selling the old insurance. Start selling the new. Hi everyone, Steve Savant here, the host of the radio talk show, The Quest for Financial Freedom. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and the term that ended in a claim, well, the client had to die to get it. It's a wonder to me that we just don't call term life insurance death insurance, because you have to die to collect on the benefit. Now there's a term insurance policy that covers you during a chronic illness. It covers you in a catastrophic event, even a terminal illness, and pays your monthly premium during unemployment. What term insurance can do all that? Western Reserve Alliance Advantage Term. No other insurance product bundles so many solutions to so many of life's unexpected problems in one policy. And there's more. A disability rider, a waiver of premium rider, children's riders, and even a return of premium. For more information, call Brokers Alliance at 1-800-290-7226. Well, welcome back, everyone, to our special tribute to March Madness in the Final Four. I'm Steve Savant, host of the radio talk show, The Quest for Financial Freedom. We're broadcasting live at the All American Sports Grille in Fountain Hills, a suburb of Phoenix, Arizona. You can watch this broadcast live at www.brokersalliance.com/March Madness. And you can also download this whole entire show at Vimeo, YouTube, the Insurance News Net, and agentnavigator.com. You can click the red button on our homepage. That's our archive button at www.brokersalliance.com. And don't check us out on our social media sites on Facebook, LinkedIn. Follow me on Twitter, and of course, the Insurance Forum where I blog. In this segment, we're going to rank our top final 4 impaired risk carriers. And to help us sort it all out, please welcome nationally recognized impaired risk expert, the one, the only, Gary the Bulldog Baker. Welcome to the madness, Gary.
Well, thank you, Steve. It's a pleasure to be here, and thank you for having me.
Well, we're talking about 3-4 years you've been in this business?
Going on about 32, 33 years.
If you've been in this business
Steve.
as long as Gary and I have been in, you're probably already table 2.
Well,
But don't worry. We have shaving programs to take care of that.
I was just gonna say, absolutely, we could take it and shop it and be aggressive.
I'm there because
That's the number.
And we're going to talk about who's aggressive in all these divisions. But before we get into substandard,
Sure.
I want to talk about the basic idea of preferred underwriting. I'm thinking of Lincoln Benefit's Super Sherlock program, where they're actually placing people on their preferred best with medication for cholesterol and medication for high blood pressure. Gary, what? I don't get that.
Well, the Sherlock program, the Super Sherlock program that's offered, be it by Lincoln Benefit, is an interesting one, and it was one of the first ones that offered the credits. And what I mean when I say credits, what the underwriters are doing is they're reviewing, seeing what exactly they could find as a credit to be applied to get the underwriting offer improved. For example, at Lincoln Benefit, Preferred is now available for mild depression, controlled right bundle branch blockages. Now, this is Preferred we're talking about,
I can't
Steve.
even believe what you're saying.
Sleep apnea. How about this? Ulcerative colitis. And
Back in the day, that was a table 2.
table 2, if not, is, we've got to really watch and see, of course, any flare-ups.
Right.
But, again, what are some of these credits? Well, the credits actually come down being to be treadmill, a normal treadmill, echo, current BP, blood pressure, exercise, BMI, family history, and favorable lipids. Most of those credits are the ones that are also being applied at other companies.
So besides Lincoln, I've seen Johnny Hancock doing this as well. They're playing in this preferred area with credits that really, in the old day, this was a standard or a table.
Oh, there's no question that these credits have really, really made a change in the underwriting world.
Well, let's talk about when we talk about Hancock and Lincoln Benefit. I've noticed you have a new player that kind of plays in this realm too. And I'm sorry, but this is so new to us. The principal. I mean, I'm sorry, I just never seen them on our grid. Now they're on our grid.
Oh, they're certainly not a grid. Not only our product grid, but they're on my top 10 Final Four for regard to companies that are aggressive. And one of the features with Principal that has us all excited, especially myself, is this, that they don't only apply credits. So you could have potentially a table 5, and you could actually have it taken down by credits to a table C, which is then table shaved. Now, you could also be at a table C, table shave it down to standard, and here's something exciting. We've never had this opportunity ever before, and that is that we can use the credits to get to a preferred class.
That's outrageous. I mean, that's how much underwriting has changed and medical advancements have impacted the life insurance market. We see a lot of companies, Gary, and I have to say this because you and I have been in this a long time. I've seen a lot of companies, we have 20 that promote table shaving and life credits. I have not seen very many, though, that actually do what they say and especially allow table credits or table shaving and lifestyle credits on the same client. Talk a little bit about that.
Certainly, but be my pleasure. Actually, what you're saying is very, very true. What's going on is this. Many years ago, let's go back up to 10 years ago, the thing that became very popular was table shaving, table 4 to standard, usually up to, I would say, age 70, $10 million. And in addition, I'm sorry here for a little technical difficulty here, but okay. Back to the point being made. So about 10 years ago, what we've done is we've seen this whole transition, okay? And at this particular point, what it comes down to is that the companies, only 3 or 4 are now table shaving, true table shaving.
Right.
And these companies have stayed into the table shaving market primarily because they believe in it. And those companies actually come down being Lincoln National, Nationwide, and the Principal.
Well, now we have 2 players that have not been traditionally in substandard before. I mean, you were talking about Principal and Nationwide, property casualty company. Wow. Sure. These guys have stepped up to the table. They're kind of new kids on the block. They're actually causing a little stir in the underwriting community. I mean, these two carriers are so new.
They've got the underwriting departments and actuary departments from all of these various competitors all up in arms trying to figure out what Principal is doing. And all Principal has done is they've taken themselves from being a sleepy dog and chosen to get active in the brokerage marketplace. And that is exactly why they're doing what they're doing.
Well, when you look at all the lifestyle credits, and remember, specific to whatever the disease or malady is, you can go ahead and we'll send you the lifestyle credit questionnaire to see if we can do a preliminary work for you so we can figure out, is this the way to go? Because many companies advertise it, many companies promote it, but how many companies actually really use, especially in the combination that we just said, table shaving and life credits on the same client? Now, let's talk about table ratings, because this is really, when we were talking about this a couple days ago, this really blew my mind. I'm thinking, I think there's like one or two carriers that actually do a table 1 now still, right?
Yes, AXA happens to be one of them.
AXA is one of them. So, but generally, most of the people are starting at table 2. If you're going to get substandard, you're at table 2. But I've noticed now, Gary, you're doing flat extras in lieu of table ratings to get the client back to preferred. That is an old technology that you've resurrected. I don't know of anybody doing it but you.
Steve, I'm smiling because I sat down in trying to figure out how to win this case, and it's like anything else. If something's working, hey, we stop doing it for whatever reason.
That's our industry.
And exactly. And 20 years ago, when I first started to utilize this concept, this program, it was very, very popular. And it's coming back now through several companies that I've approached that I have gotten the permission to negotiate. And what exactly Steve was mentioning is this. I had a particular case. It was a 72-year-old female. Make a long story short, she had come in on a standard basis. I could not deliver the standard. It was Lincoln.
It's premium tolerance issue.
It was a premium tolerance issue, and so I approached Lincoln Benefit, being the bulldog, and I sat down and negotiated with the actuaries as well as the chief underwriter. And the whole program is this. You take the standard up to preferred. Now, the company could not do that without recouping some of their profits, because obviously there is some difference in pricing.
Some liability here.
Absolutely.
Yeah.
So what they're doing is they're then applying a flat extra to that, and what the flat extra is pure profit, and that helps the companies put that all together. And we've had some success with, as I said, Lincoln Benefit, Genworth, Lincoln National, and a couple other companies.
So we took a client that was standard, which we could not write because the premium tolerance, the client said it's too expensive. Then we went back to, in this case, Lincoln Benefit Life, and we went back to Lincoln, said they put us on a preferred, but then they put a flat extra. Now, was that a temporary flat or was that a permanent?
That was a temporary.
So it's going to come off at what time?
Yeah, it usually is about 5 years.
Wow. So in 5 years, instead of living with a standard for the rest of my life, I have a limited time. I'm on a preferred platform, and my temporary is going to go away in 5 years. I love that. And this actually was old school, but now it's all been resurrected.
And if you think you love it, imagine how the brokers are loving it.
Oh, I love it. I mean, of course, we love our brokers, and if they love it, we love it.
You betcha.
That's right.
You betcha.
Well, listen, I haven't seen age rated up in like forever. I noticed we do it in SPIA underwriting for medically underwritten single premium immediate annuities. Have you seen anybody doing any age rated, or is that pretty much passe?
That's passe.
That's the museum. Exactly. Okay. Now, when we talk about impaired risk carriers, you can't talk about impaired risk carriers unless you talk about the people they're partnering with in reinsurance.
Very true. Very true.
Talk about, because we're looking at the Lincoln Re, Cologne, Gen Re. We're looking at Swiss Re. These are major players in the American market. Talk a little bit about who do we play with, why, and there's some conservative ones, there's more liberal ones. Some people are even using 2 manuals.
Well, some companies, or one company in particular, is using their own manual, but that we'll get to in a couple
Get
seconds.
that in a second. Yeah, I want to hear about that.
Oh, yeah. But, yeah, there are certain reinsurers that are out there that may be more conservative. Don't want to say anything negative, but the point is that it's on the street. Swiss Re happens to be one of the more conservative reinsurers, and unfortunately, several companies are utilizing them. Now, in addition, General Re. Some companies are using both Swiss Re and General Re and cherry picking whatever company, whatever reinsurer shows the best offer.
By the way, I love that idea, taking
You
two
betcha.
platforms and cherry picking the best benevolent underwriting by reinsurance manual and then cobbling together a final offer. I love that.
There's absolutely no question about what you've just said.
By the way, go ahead. You can say their name. I think that'd be a good plug.
Okay, Mother Met, lovely
Well,
Met.
not Met yet. I want to talk. I
Oh,
want to
I'm
talk
sorry.
about who this Protective is. Isn't this Protective doing the Swiss and the Gen Re?
Yes, actually, it's Protective. Previously going to be previous West Coast Life. That's correct. I'm sorry.
That's right. And the only thing I want to say about Protective is just remember, cha-ching. I want that ad. Okay. Now let's talk about Met, because Metropolitan. When I think about Metropolitan, here's what I think of: 3.6 trillion in force.
That's correct.
I mean, huge. 290 billion in assets. That's billion with a B. I noticed that they're number one in both those areas, assets and insurance in force. And a little side note here, if you took the total top 10 in force, and we all assigned, all the insurance people assigned the beneficiaries to the United States government, we'd wipe out our 4.2 trillion debt. Just the top
Overnight.
10. Overnight, we'd be golden. So if you feel like you love America, just go ahead and put them on as your beneficiary. No, okay. But talk about Metropolitan, because these guys are so big, they do their own manual.
Well, absolutely. I want to touch briefly on that because our show is running tight, I'm sure, at this particular point, and there are a couple points that I would love to get into as my final four: impaired risk in various areas. What we were talking about before with Met is this. Met has sat back, and they have, because of the size, as Steve just said, they've got the ability, because of volume, to look at cases on a volume basis that they've underwritten themselves and see what their mortality is and see if they can perhaps move themselves up to be a little more aggressive in cardiac or in cancer and et cetera. And so what Met has done is just that. They have created their own reinsurance manual. And God bless them, it does work.
Well, when I think about Metropolitan, and because in the older days when you and I were back there, Metropolitan was never in the substandard market.
Certainly not.
They were not a player on anybody. The Metropolitan is so big now, so huge, and their underwriting has really come into the 21st century. I have to say, they're players. And we did significant numbers with these guys last year.
Yes, we did.
So we appreciate Met and what they're doing. And I got to say one thing, when we talk about Metropolitan being good in a couple of these areas, I'm kind of curious, what is your sweet spots? I know you got these sweet spots where if you have these issues, you need to bring this to Gary, because these sweet spots in underwriting really show up big. Give them one of your top 10 sweet spots that you really like, that really help us mitigate ratings and get our clients up the food chain into preferred.
I'm smiling because I'm always trying to find what companies have the sweet spots in what areas. So let's just do a David Letterman for a quick second.
Oh, yeah.
Top 10,
Top
coming
10,
down.
number 10.
Number 10, various diabetes. These are, remember, credits. These are competitive credits. So we start off, as I said, at number 10, various diabetic situations. Arthritis, depending on arthritis, not rheumatic arthritis. Asthma, mild. Ulcerative colitis. Here's that ulcerative colitis. There has been great moves forward on the treatment of ulcerative colitis. Sleep apnea. My goodness.
I can't believe that made the list.
That made the list, but it's not only on this list. Anxiety, blood pressure, total cholesterol.
Wait a minute, blood pressure?
Blood pressure, treated or untreated. Now, some companies...
I'm super preferred just on that issue alone.
Yes. And it's an interesting point, Steve, that I was on a conference call with North American this morning, and I just want to reiterate that, I love doing my underwriting, but it's a constant moving target. So at any particular time when somebody asks me, who's my top final four in any particular area, it's going to be changed.
It's going to be tough.
Right. These companies are now starting to come out with recognizing 12-month-old exams, using them, and that's just one little tidbit as we move forward in the underwriting world.
Well, let me ask you this. Who are your players in cancer? Who's picking up the ball on that?
ING, Lincoln National, Lincoln Benefit, and AXA. Now, there is also breast cancer, and I separate breast cancer because there has been a tremendous amount of movement in that, and those players really are West Coast Life, Met and Trans, and of course West Coast Protective.
That used to be a serious table or decline, and that has totally changed over the last decade. How about your top in cardio? It's all the cardio events.
Absolutely. Those would be AXA, Hancock, Principal, and Met.
AXA, Hancock, Principal, and Met. Again, I'm surprised that Principals is in there. I just blows me right now. If you had to separate the two between diabetes, when I think of adult onset, type 2, and insulin, who are the players at that? Because if you're going to have that, that's probably your toughest one.
Oh, there's no question. But again, Prudential has come out with a much more aggressive outlook on diabetics. Matter of fact, that was released within the last couple of days. And as far as other companies are concerned, Steve, hold the fort, but Principal is going to come right back in.
For type 2 diabetes on adult
type
onset?
2, absolutely.
Wow.
As a matter of fact, a well-controlled A1C at about approximately 6, I was able to get a standard on a type 2.
A standard on a type
standard on a male 58.
Unbelievable.
So it does, this company is really looking to put themselves on the map.
Well, they are. I'm looking at another one here. I'm looking at sleep apnea. And talk about that, because that was always a problem. And now we have mitigating issues that help us manage it better.
Oh, it's so true. Today, nobody really has to go through an entire sleep study to see whether or not you have sleep apnea. You can go through other studies.
I noticed that test, you never get to sleep. They wake you up.
That's correct.
I mean, it's like, why have the test if they're going to wake you up every time, right?
And unfortunately, you're laying there with this mask on your face, and it's rather uncomfortable.
Yeah.
And being
But no more.
Yes, no more. They've got also, instead of using CPAPs, they've got much smaller units now. So they've made progress, but the biggest progress is the treatment of sleep apnea. It's not just weight loss. There are other areas, other ways to treat sleep apnea.
How about CAD? The artery disease, chronic artery disease.
Certainly.
Who are the players in that?
Well, those players come back again: AXA, Hancock, Principal, and Met. And like I've said, you're hearing these same companies come time and time again on my top final 4 or 5. And that is because they've earned those spots.
Now, this could all change again, right?
Tomorrow.
Tomorrow. So we're going to try to keep you apprised. In fact, we're going to be doing, in the fall, we're going to be doing our patented Halloween special called Tales from the Crypts. And we're going to talk about all the cases that have been declined, postponed, heavily rated. A lot of we're just going to give you some tremendous information. And we're going to spend a whole hour with Gary and a couple of the great underwriters that we play with. That to me is going to be a huge show. So when I look at this, the big stunner in this whole list here, Gary, has to be the Principal, and especially up front on the preferred rating. I have to say, nationwide, that blows my mind.
Yes. Well, there's one last thing that'll blow your mind.
Keep it quiet. It's happening.
One more time for Principal. One more time, and that's weight. They've got a very aggressive height and weight chart.
Well, think about Principal, and I have to say, Prudential's a BMI carrier too, so we don't want to leave them out. Principal, if you're heavy, if you're vertically challenged, that's the carrier. Well, thanks everyone for coming to our broadcast of the Final Four review, our tribute to March Madness. Remember, you can view this show, including my quest for the financial freedom write-off, Vimeo, YouTube, Insurance Newsnet, Agent Navigator, or just click on the red button on our homepage at www.brokersalliance.com and on our social networks, Facebook, LinkedIn, Twitter, and the Insurance Forum. Watch tomorrow's show, Won't Get Fooled Again, the facts on tax-free income on April Fool's Day, 1 p.m. Central at www.brokersalliance.com/April Fools. This has been a Bravo webinar event from the National Insurance Clearinghouse and Brokers Alliance. So when you need financial guidance, call Brokers Alliance.